In this video, we're going to talk about how the 2023 FHA mortgage insurance premium changes are going to impact your home buying budget. So stay tuned. Hey, this is David with the Xie Mortgage Team. So we all have heard it. And if you're on social media and if you're not hiding under a rock, you're going to know that FHA mortgage insurance premium has changed in 2023 for the better for once in our lifetime, right? You know, I've seen so many changes up, down, every different way. And the last change was a really, really big change that affected a lot of home buyers for the worse. However, now with the new changes that are introduced in 2023, it's gotten better. So let's dive deep into this and let's talk about all the changes and how it's going to affect you. So number one, what is FHA mortgage insurance premium? Well, let's talk about an FHA loan first. An FHA loan is a great loan backed by HUD, Housing and Urban Development. It's a loan that's designed for people that may have, a little more credit challenges or income challenges. So what that means is FHA is willing to go down a little lower on the credit score. They're also willing to provide a very competitive rate for people that don't have 20% down to go conventional. So when you're getting one of these FHA loans, the minimum down is 3.5%. The credit score that is in place is anything over 580 is 3.5%, and anything under a 580 credit score, 579 to 500, is going to require 10% down. With that being said, because of the lower monthly payment and the lower down payment, there's got to be something that protects HUD and FHA, and that's MIP, which is mortgage insurance premium. And there is a direct tie between the conventional loan and the FHA loan in that conventional loans, if you don't put more than 20% down, you're going to have PMI, which is private mortgage insurance. So the differences between the two are this, okay? On an FHA loan, you're going to have an upfront mortgage insurance premium, and that's typically 1.75% if you are looking at any FHA loan across the board, whether it be a 15-year term or a 30-year term or anything in between. It's 1.75% upfront. And then you're going to have a monthly mortgage insurance, which goes on for a certain period of time. So depending on the loan amount, depending on how much you put down, that annual mortgage insurance premium in the term could be as low as 0.15, and that's going to be for anything that is less than $726,200, and you're putting 10% or more down. With that mortgage insurance premium term on a 15-year is 0.15. Then it's going to go up to like 0.4, 0.5, 0.55, 0.7, 0.65. There's a bunch of different differentiating terms out there, but we're going to put a chart down below so you can look up your specific scenario, because I could spend all day talking about this mortgage insurance premium. So with that annual mortgage insurance premium, let's just say we use the traditional, let's just say 0.75. So anything that's over 726.2 and anything that's greater than 95% loan to value, 0.75, we're going to take that 0.75 annual mortgage insurance premium and divide it by 12. So you're going to have this upfront mortgage insurance premium and you're going to have a monthly mortgage insurance premium. Versus conventional, when you have conventional mortgage insurance, you can do either or, right? You have your own choice. You could either do a single premium where you buy it out up front. You could do a monthly premium where you have a monthly charge just like this FHA has. Or you can have a hybrid, which is a split where you have the upfront and the monthly to make sure your monthly is a little lower. And that FHA, the difference between the FHA mortgage insurance premium and the conventional PMI is that if you don't put more than 10% down on an FHA loan, that mortgage insurance premium is forever, okay? It's through the term of the entire mortgage. So you take out a 30-year mortgage, it's throughout that entire 30-year mortgage term. Whereas on a conventional loan, you have the choice, and after that mortgage insurance premium or PMI is paid, when you get below 78% of the value of the home, or you can prove it with an appraisal, that mortgage insurance, that monthly will go away, or you have that upfront that pretty much is paid out all upfront and you're good. The cost, like I said, is anywhere from $175 upfront, and then your traditional would be 0.55 on the annual mortgage insurance premium for like your regular 726.2 type loan amounts. You have to factor everything into it, okay? So your annual percentage rate is all factored in with your upfront mortgage insurance premium, the interest rate, as well as your annual mortgage insurance premium. So when you're comparing your conventional and FHA loan, your APR is going to be the telling point as to which loan is a little better for you in your terms that you're looking for. How would you choose the best program that matches for you, right? That's going to be the next question. So here's one thing to really factor in, okay? When you're taking out an FHA loan and you have that upfront mortgage insurance premium, I would think of that as discount points that you have to pay to buy down your interest rates. When you take all that into consideration and you look at your goals, whether you have a long-term goal of keeping the house for a very long period of time, or maybe you're just in this area and you're looking to purchase a home that you're only going to keep for a couple years, or you know you're going to refinance after a certain period of time, at that point, I would certainly talk to your lender about, hey, what are my options, right? If I get this mortgage insurance premium with the FHA loan versus a conventional loan and take a higher rate, which one's going to be better? Or maybe we get the FHA and we get a higher rate so that we get some lender credits. Instead of discount points being charged to you, the lender is providing you a lender credit to cover some of the cost so that it kind of offsets that 1.75. At that point, you would weigh everything out and you'd say, okay, based on this, I've come to the conclusion that FHA is better for me or conventional is better for me. But let's reel it back in and let's talk about how these changes have affected you. With all these changes in 2023, the long and the short of it is that you're saving 30 basis points on your mortgage insurance premium. So that's made lending a lot more affordable. The government's really pushed to make sure that first-time home buyers in affordable housing is out there to kind of combat the higher rent amounts and everything that are going around. So when you're out there looking at all these things and you're looking at, hey, what is the difference and whether the FHA loan's better for you or the conventional loan, I would definitely take this all into consideration. If you have questions navigating this or need help finding the right loan program for you, I'd be honored to help you out. My name is David Xie. I can be reached at 757-478-8493, and I look forward to hearing from you. Thank you.